Welcome to Shenkman Education. My name is Martin Shenkman. This quick video clip is on how to properly administer a defined value mechanism. A defined value mechanism is a complex tax planning technique used when you make large transfers that could otherwise be subject to gift tax. Concept is conceptually simple but difficult to implement, and implementation or administration is critical to possibly succeeding. Here's the concept very simply. Instead of gifting, say, 50% of an LLC that's worth $10 million to a trust, I'm going to gift $10 million worth of the LLC, which is estimated to be, based on an appraisal, 50%. And if, in fact, the IRS adjusts it, I hopefully can argue I don't get a gift tax charged to me because I didn't gift 50% of the LLC. I gifted 10 million. So if the IRS says it's 20 million instead of 10 million, well, I only gifted 10 million, so I gifted, based on gift tax value finally determined by the IRS or the courts, 25%. The critical issue, if you want to succeed with that, and the IRS is non-acquiesced, so it may not succeed in any event, but it's certainly something that's commonly used and certainly might make sense in many cases to use. And there's more sophisticated techniques with spillovers under Christensen and Petter and other cases. But with any of these defined value mechanisms, it's got to be administered correctly. If you have a $10 million transfer that you estimate is worth 50% of an LLC or other S Corp or other entity, you have to make sure that the K-1 forms on the entity's tax return have an attached statement saying that it's not 50%, even though 50% was listed on the face of the return because you have to put on the K-1 a percentage, but rather it's a fixed dollar amount pursuant to an assignment that included the defined value clause or however you need to define it. You need to attach a statement so it's clear. The books and records for the entity need to reflect that. People, like in the Sorensen case, didn't reflect things properly on the corporate records, and the IRS disallowed the defined value mechanism. It didn't succeed. You have to make sure if you have an institutional trustee, which is quite common in this kind of planning, that they list it correctly on their books and records. They may have a small field where they can list a truncated thing, and they'll tend to want to just put the percentage, but they need to do something so that their records are reflective properly. You have to make sure allocations are done properly. You should have an economic adjustment mechanism in the entity governing document, so if there's a later adjustment, you can correct for it. And finally, when if there is no gift tax audit, 3 years from the filing of the gift tax return, the statute of limitation runs. You need to now revert back to listing just the percentage and not the statement and the dollar value that I said earlier. You need to respect the formalities of a defined value mechanism if you want it to succeed. Thank you for joining me, and please keep in mind that all the information on Shenkman Education is for educational purposes only. Don't take any legal action without appropriate professional advice.